Hi, this is Ed Weinberg. This is our meetup, virtual meetup on CTRE Investors. You can find this on a business page, CTRE Media. And if you go to CTRE Media and you start watching from there, then you can actually comment. We'll see the comments. We'll answer the questions. Today, we're going to talk about hard money. So let me bring in our hard money expert, Ed Hendrickson.
Hello.
Hi. So tell me, Ed, what's hard money? Why do I need it? What can I do with it? Why don't we start out with what's hard money?
Okay, well, hard money is a product that investors use specifically to buy investment projects, whether that be a fix and flip or maybe a fix to rent or a bridge loan that they might need to get some sort of other end product at the end of the day. So it's investor friendly money. Whereas for instance, you can buy a property that doesn't need a CO always. For those that don't know, a CO is a certificate of occupancy. So when you purchase a property, you will need the town usually requires you to have a CO. So everything's up to date and everything's all right in the home to make it livable. But a lot of times these properties that you're flipping are not livable. So a traditional bank will not lend unless if the home has a CO. Hard money will lend without a CO. So that's really kind of the big difference is you can get money for homes that need to be rehabbed that a traditional bank will not lend on.
Okay. And by the way, just so I know you're there, because I can see we got some viewers, but I'm not sure who they are. If you just click the like button or click hello or type in hello as a comment, then I'll know you're there. And if you got any questions, just leave me some comments and we'll be able to answer them. So what we're talking about here is a loan that we're going to get for a special purpose, as an example, to fix up a house. So if I'm going to fix up a house, well, first of all, you're not just a hard money lender, you're a broker. What's the difference?
Okay, so as a hard money broker, it means I work with many different lenders. So bottom line, I've gone out and I've made relationships with a couple different lenders. And I have a deal with them that what I can do is I can bring clients to many different places. The reason why I'm a broker over working for a direct lender is I'm able to provide you the best loan that you can get. For example, there might be someone out there who's an expert and they've done 10 flips in the past 2 years. There is a lender that is better suited for you than somebody who has a 580 credit score, for example, and has never done a flip before. So there are lenders that have better products for people who have experience, people who don't have experience, maybe somebody who has a good project or a not so great project. So it gives me the flexibility to take borrowers to the best place for them instead of them going to the same lender every single time where they might not be getting the best terms. I can move them around to different lenders who will provide them the best term for the specific deal that they're working on.
Okay, so why don't we take an example? Let's say that I'm brand new. I've never done a flip before, and I come to you, and I've got. Well, why don't you give me an idea of what kind of a credit score they're going to want to see, and what some typical terms might be.
So most hard money lenders are going to want somebody who has a credit score of 600 or higher. So now again, we can get very, very detailed when we get into this stuff, but just to keep it as generic as possible is there are some lenders that if you're above a 600 score, it doesn't matter. The rate stays the same. You're above 600. Then there are some lenders where they'll tier you. So somebody from a 600 to a 650 will be a certain score, a 650 to a 700 will be a certain score, and so on and so forth. So that would be an example. So so yes, credit score is one. How about how much you want to borrow at purchase? So I have borrowers that want to borrow 90% at purchase. Not all lenders do 90%. So they're willing to pay a little bit more in an interest rate to go to a 90% lender. Whereas I have guys who just say, I just want to pay the cheapest possible. I can put down 25%. So I can take them over to a different lender. Now, just to give people an idea of hard money and terms and what I'm capable of doing, is for standard, I can offer anywhere, obviously, purchase prices up to 90%, depending on the experience that the borrower has. It's difficult to get 90% for somebody who's never done a deal. I can offer rates anywhere in the eights up to, I never, honestly, I've never sold a loan higher than 12%. Yes, again, there are lenders out there that do higher than 12%, but I won't. The benefit of coming to me is, I will educate you, and I'm not going to give you a loan that's 14%. And there are some lenders that would lend you 14%. And the third thing is back end loan to value. So that's how much they'll lend based off the after repair value. So what that property is worth when it's done. Lenders will lend anywhere from 65 to 75% of that number. So again, it's kind of putting you into a mental matrix that I have, that I know where my lenders are going to be, as to how much you want to borrow to get maximum leverage, how much you're willing to put up front. And then the lenders will also lend you rehab money. So that's funds in order to be able to do the construction on the project. I can get those funds as well. And that'll range also anywhere from 80 to 100%.
Okay, so you've told us what it's going to cost to rent the money. I guess the next question is, will there always be points, and what's a range of points that I might have in order to originate this loan?
The general answer is yes. As of right now, the market, there are always points. There are one or two lenders out there that don't charge points. However, I will caution going to them, because they have what's called, so there's a thing out there called prepayment penalties. So a typical hard money loan is 12 months, interest only loan. There are lenders that say they have no points. However, if you pay the loan off in 6 months, they might charge you a point or two for paying off prior to the 12-month term. So the short answer is 90% of lenders out there are charging points. What was the second question? Sorry.
Well, okay, that's that's a good, and just I get, okay. My next question is, what's a point?
So a point is actually a percent of the total loan that you would pay. So let's say your general, very simple, you're purchasing a home for $100,000, and you're going to do $100,000 in rehab. If you get a loan at 80%, you're borrowing $80,000 to the purchase, $100,000 to the rehab. You have $180,000 total loan. You might not be borrowing that all up front, but that'll be your total loan amount. If you're charged 1 point, it'd be 1% of $180,000. So simply stated, it would be $1,800 would be what a point would cost you.
Okay, and let me see. Okay, so I do have some questions, and I'm not sure. Is there a delay? That's what Charisse is answering. And you mean, is there a delay between what we're saying and what you're doing, what you're typing? And the answer is it could be 10 or 15 seconds, could be 30. Intros. Siobhan, I'm not sure if you want to intro yourself. I can't put you on right now, but we can talk about doing that next time. And hello, Siobhan. Again, if you leave a if you leave a message, we can put the message up here and we can all see it. All right, so let's see, what else do we have? So there's two kinds of loans, it sounds like we're getting, or two parts of the loan, and maybe they can from what I hear from you, maybe they have different terms. So part of the loan, the first thing I'm going to need to do, if let's say I'm going to flip a house, the first thing that I'm going to need to do is to purchase that house. So I'm getting a loan to purchase the house, and then I'm getting basically another loan to do the repair on that house. So are they going to have exactly the same terms, exactly the same co-payment from me?
Yes, so good question. So it actually is one loan the way it works. So let me break it down. It's one loan, and it is usually it is the same interest payment as the original loan. So let's go back to my original scenario where you're buying a house for $100,000. You're going to put 20% down. They're going to give you an $80,000 loan. Let's say that loan is at 12%. Day one, you're going to be paying $800 a month. So you're also now borrowing $100,000 in rehab. The rehab funds, typically on most lenders, I do have a lender that does release rehab funds at closing. However, most lenders will release the rehab funds in a draw schedule paid based off completed work. So you will take your $100,000 and you might break it down into five $20,000 increments. So that means you will go out and do $20,000 worth of work with your money via cash or credit card, however you get it done. And then after that, you will give us a call, and an inspector will come out, see that the $20,000 of work was done based off your scope of work that you're going to provide in the beginning. And that scope of work is just an outline of the work that you're going to be doing during the project. So now they release the $20,000. Your total loan amount at that day is $100,000. So your new monthly interest payment would be $1,000 a month at 12%. So that's the general answer to that. It is one loan. The rate is the same for both the rehab and the purchase funds. However, you are not charged interest in most cases until you draw down the funds. So the more you draw down, the larger your payment gets. Again, as we get deeper into this, there are lenders that charge interest on the total loan amount. So day one, you'll pay interest on $180,000, even though you haven't borrowed it all yet. So now your interest payment's $1,800 a month. There and by, you're paying $1,000 more a month to borrow that money from the beginning. So in that case, you want to really rush to get your rehab done because you're paying interest on something that you don't even have yet. However, again, another reason why I say working with somebody like myself is great, because I can educate you on that. And maybe that guy might be charging you, the guy who is charging on interest that's not, or rehab funds that aren't borrowed yet, it might be slightly cheaper, but at the end of the day, it might cost more. I mean, we're able to look at each individual situation, each individual project, and find out what the best loan is for you.
Okay. All right. So let's go for some questions here. Siobhan wants me to do an intro, so maybe you missed it at the beginning. My name is Ed Weinberg. I am your host and interviewer. You can find this after we're done at a couple of different places. This interview, one of them is at CTRE Media. I share from there onto several groups, including my own group, CTRE Investors. You can find it on a YouTube group, and you can also find this on my website, ctreinvestors.com. And today we're talking to Ed Hendrickson. There we go. Let me get there we go. Ed Hendrickson. And Ed is a hard money broker. And Ed, you want to tell us a little bit about your background? Do you actually invest in real estate too?
Yes, I do. So briefly about my background. I used to work in New York City, and I did trade support. I worked through the hedge fund world. I worked on trading desks, and I got into house flipping myself. Through that, I felt that the best way for me to learn more about flipping houses was to learn how the loan process worked, being a finance guy. So I went and worked for a hard money lender. I worked for a hard money lender, direct lender, for about 14 months is where I worked there. And then I actually left that business to go and be a real estate agent for investors. By that, I mean, I purchase properties at sheriff sales. I purchase properties that are in rehab condition, and I do some wholesaling from a standpoint of people who get properties that need to be rehabbed. They might contact me because they know that I have buyers, and I will help transact the wholesale. Now, through that, I started to realize that there was a lot of people that were out there that were not very educated on the hard money process, and Through some encouragement of my broker, actually, I decided to continue to do hard money lending from a broker standpoint. When I left the lender originally, I wasn't going to continue doing hard money. I was going to move on, but I have an expertise and I understand the business, so I stayed in that. And I've been doing that for about 6 months on my own now as a broker.
Okay. So Nate asks, is there a price to be paid in front of a loan? So I'm not sure if he means points. Is there, if I want you to work for me, do I have to pay you any money up front before you even find me a loan?
So actually, that's a really, really good question. There is no fee to use me at all at any point, to be honest. Though I don't charge anything to find a loan. I've worked with many people and educated them, and they decided that they weren't going to do anything. I have definitely talked myself out of business because I will tell people that their project is not necessarily a good project. I believe that that's a good thing. Maybe one day they'll find a better project, but I'm not going to put somebody in a loan that doesn't make sense. So as far as me, you are not paying me anything. You are not paying me anything up front. You don't pay me anything at any process. I am paid by the lenders. So again, I've built a relationship with each individual lender where they're paying me out of the points that you're paying. So if you're paying the 3 points on a deal, I'm getting paid out of those 3 points. So directly to me, no, you're not paying me anything. However, yes, there are fees to get a loan up front. And typically the general fee is the points that you're going to pay. Some lenders have an application fee. Some lenders have a credit fee. Again, it all depends on who the lender is, because some lenders don't have any of that stuff. And they just charge what would be a legal fee for the loan. All lenders are charging some sort of fee up front. Call it, some charge everyone, some charge a general fee. It all depends, but there's nothing paid to me to help you find a project, find a loan.
Okay. So Jim asks, instead of making monthly payments, is it possible to repay the full amount of the loan after selling the house instead of paying the monthly payments as soon as the money is received from the lender? Or do they all start asking you for money immediately?
So this is going to be a question based off experience. The short answer is you can roll points and interest rates into some loans for some lenders. Again, it's going to be based off experience. Typically, for someone who doesn't have much experience, they're not going to allow that. It's going to be based off of the loan. So if you have a very good deal on your hands, they will do that. However, if you're very tight against the margins, they're not going to do that, and they would rather see you pay out of pocket throughout the whole entire process.
Okay, so there are two things what I'm getting from you that they're going to be evaluating. First, they're going to evaluate you as a person, and they're going to look at your credit and they're going to look at your experience to decide what they're going to do. If you're above a certain level, then the next thing I guess the next thing they're going to look at is the actual the project. So are you going to make sure there's enough money in the project before the lender going to make sure there's enough money in the project before they actually lend the money?
Yes, so the lenders will look at the project and make sure that there is a minimum margin of profitability. Each lender has a different calculation for that. However, I will go over with somebody prior to even bringing them to a lender and explain to them, how much money they will or will not be making. I have calculators. Actually, at this point, I do have a website that people can go to contact me. It's the company that I operate through. That's my business. It's called Though Funding. That's THOFUNDING.com. On there, I have a calculator where you can go in there and put in your purchase price, your rehab amount, your expected interest rate, points, how much your title insurance is going to be, what you think your realtor is going to charge at the end, how much you're going to sell it for, and it'll actually tell you how much money you're going to make. I put this together specifically because time and time again, I meet people and they found a deal that's $100,000. They're going to put $50,000 into it and sell it for $180,000. And they say, I'm going to make $30,000. This flip is going to be very profitable. But when you start adding in what the true costs are, as we've mentioned, you got to pay points to get into the loan, or even if it's rolled in, you have some sort of carrying cost being interest and taxes. And then when you sell the house, you have to pay a realtor. Maybe you're a realtor, so that actually helps benefit you. But at least in most states, there's transfer taxes and stuff like that at the end. And you start to, every time you add those up, you start squeezing that profit a little bit, and you find out there's $20,000, let's say, in costs throughout the process of the loan. This deal that we had just talked about, now you only make $10,000 or $20,000. So it might start to seem not as great of a deal. So yes, we'll go over all of that stuff if anybody, would like to discuss deals or, see what I can do to help them. Or on my website, like I said, is a calculator that they can go to and, play around, see if a deal works.
Okay, so was that THO, Tango Hotel Oscar funding?
Yes, sir.
Okay, so let me see if I can put that. Okay, I'm not sure if I'm putting that up. Okay, I haven't put it up yet, but I'll figure out how to do that. All right. So a couple of things. I guess that you're also going to look at the carrying costs. You're going to make sure that after they pay insurance, after they pay taxes, assuming they're going to have the house for 6, 7, 8 months, they've got to be able to afford to pay the taxes to the town, and all the other expenses. They're going to heat it through the winter, etc. Cool it through the summer. We're going to basically make sure that they've got enough money in this deal in order to be able to afford to do that and put some money in their pocket.
Correct. Because the worst thing you can do at the end of the day is a first-time flipper comes along and they make no money. They're never going to do a deal again. So it's in the best interest of everybody who's involved in the deal to see that they're going to make money, so they do another deal.
Okay, so the other thing that I'm getting out of this is that it's a good idea to use a hard money lender. And one of the things that you're doing by using a hard money lender is you're getting another set of eyes to look at your project, and that other set of eyes, because the most important thing for any lender is, can I get my money back? So the lender is not going to lend you money if they don't think they can get their money back. So there's two parts of getting their money back. One is the person, and do you have your experience and your credit score, and the other is the project. And if you do the project as you said you would, will you make any money? So you mentioned something else there before, and it passed over my head. You said that you have to do things according to your scope of work. What's a scope of work?
So scope of work is basically all the stuff that your contractor is going to do, or maybe you're going to do yourself. It's outlining the costs of the project. Are you going to paint the house? How much is that going to cost? The kitchens, the cabinets, the appliances, everything, as close as you can down to the dollar. So this way we can see how much the project's going to cost. Are you, again, another kind of point that you were saying before, some of the best people to make sure we have a good deal is a bank. And a bank, being a hard money lender, being somebody like myself, whether you're going to, not go to a hard money lender and you go conventional to buy your own home, right? The bank is going to tell you whether you're making a good or bad choice because of the fact of, if they won't lend on it, they obviously don't feel like it's a good deal. So they want to see how much money you're putting into the rehab. This way, when an appraiser goes out to find out what the value is of the property at the end, that ARV that we had talked about before, after repair value, they're going to use your scope of work and see what you're doing, so that way they can come up with an estimate for that ARV. A lot of appraisers also can turn around and say, hey, you're putting $30,000 into this kitchen. This kitchen doesn't need $30,000. You're overdoing it. And they can help reel you back in, and maybe you only need $15,000 in the kitchen. You're saying that you're going to replace the cabinets, but the cabinets are in better condition maybe than you think. There's a lot of checks and balances along the way between myself, between an appraiser, between the end bank, maybe your realtor. There's a lot of people involved that are actually helping this project get through and keep you on track. And honestly, some of the other people on track, right? Maybe you have a contractor that's overcharging. And somebody along the way can maybe help you notice that or realize that.
Okay. So if you're watching it on the replay, it would be nice if you could say hello or type anything just to let us know you're there, or give us a like. Or if you're watching and you haven't liked us yet, just click the like button just so we know that you're there. And does anybody else have any more questions? I'm just looking here to see if there's anything that we've missed. You know what? Why don't you give your website, and is there a telephone number and an email address you want to give so people can get back to you?
Yeah, sure. So again, the website is thofunding.com. That is THO funding.com, all one word there. My email address, the best email for you guys to get me, is ed at thofunding.com. Again, that's THOFUNDING.com. And then the best contact number is my cell phone. Is 551-427-2390. And I'm pretty much almost always available.
Okay, great. Is there anything else you can think of that maybe we haven't talked about yet, Ed?
No, I mean, just I really, I mean, not to just plug myself, whether somebody uses me or somebody uses another hard money broker. I do think it's a good idea to call around and speak to different lenders and find out what fees they're charging. Try to get maybe, see what other people have used, who other lenders are. It's just good to be educated. Don't take the first deal that comes along. It is kind of sometimes if it sounds too good, it might be too good to be true. And I'd hate to, find out later on that somebody got into a loan and, didn't realize that there was a fee. As Ed had alluded to earlier, and I have done flips myself, I have only just used a lender for the second time. But prior to that, I have gone through and I've used all different lenders. So anybody who you're getting a loan from through me personally, I've more than likely used them as a lender myself. So I know their process, not just from a standpoint of selling it or speaking to them. I know it because I've used it before. The only reason why I haven't used a lender at this point is maybe because it falls outside the box. And by that, I mean, maybe the credit score is not so great, or the deal, it's really for tighter deals, to be honest. So I do believe there's a lender for every deal, but I have yet to use some lenders personally. And I've also, come to encounter new lenders as I've been on this journey. So that maybe isn't why I've used them, but I have used about 5 or 6 hard money lenders personally, and they're all the lenders that I work with.
Okay. And Charisse wants to know, what is our credit score requirements? So, maybe you can give us a range, or the better the score, the better the loan. How does that? Why don't you give us again how that works?
Yeah, so it depends on, at the end of the day, it really depends on what you're looking for. But let's just go over the credit score. I can do scores anything 600 and over is easy. I'm confident I can get somebody a loan. I can do loans that are less than that. However, just remember, you can look at it easily by saying the worse score, the higher you'll pay. So if someone has a 580, 560 score, I can get them a loan that will definitely cost more. But to be in the fair market that you hear people talking about, hard money loans, 10 to 12% interest, 2 to 3 points, you're going to need at least a 600 credit score in order to be able to obtain that. Anything below that, you're going to start paying a significant amount more for kind of that penalty for that. So what is the score requirement, and how does it impact the loan? As I mentioned earlier, there are some lenders that don't care. If you're a 600 or higher, they'll just do the loan. And then it matters how much you want to borrow. It matters what kind of deal it is. So there are lenders that scale their credit score, and then they also look at how profitable the deal is, and they look at your experience. And there's a matrix that goes into it, and that decides what your rate and points will be. Obviously, the better score, the better deal, the more experience on a company like that, the better rate you're going to get. But I do have lenders that if you've done 20 deals in the past 2 years, they're still going to charge X percent because maybe you want a higher leverage. Every lender is very different.
Okay, so if I've done a couple with them and they have experience with me, then maybe they'll give me less points next time.
Yes, that is typically the truth about all of the lenders, especially from a points standpoint. So points are a little bit more flexible with most lenders. So the more experience, they can bring down the points. Some lenders do fix their rate a little bit more. So just for example, I have a lender that will do 90% purchase price, but they do charge 12% interest. There's no question about that. There's really no moving off that until maybe you've done 20 deals with them. And then they are willing to come down to maybe 11 or 11 and a half. However, their points are flexible. You're not always 12 and 3. They move you down, and they work with you from that standpoint.
Okay. And Nate wants to know, how long does it take for the lender to come out and inspect before the second draw? But let's just step back and see when we actually get money. So we go to a closing table and we get enough, and between our down payment and the money, the big check that the lender is going to send over to the attorney to do the closing, we're gonna have enough money to purchase the property. So let's say that my scope of work, I have different milestones on it, and an example might be of a milestone that we're going to do the demolition, and then after we do the demolition, can we, let's say that it's going to cost us $10,000 to do the demolition. We buy the house. Are they going to give us enough money to buy the house plus enough to do the demolition, or do I have to do the demolition and then get the money to pay the guys who did the demolition?
Okay, so there's a couple ways to answer that. Again, I hate to keep repeating back to this. It really depends on the lender and how they lend, but typically you will get your purchase financing. So you'll get your 80% of rehab funds, for example. You'll put your 20% down. Then you'll do that $10,000 in demo. You'll give myself or the lender a call. And the guys that I work with, usually within 48 hours, there'll be an inspector out. And then your money is received within 12 to 24 hours after that. So I always say within 48 to 72 hours of ordering an inspection is when you would receive your funds. However, a good suggestion to use for any lender that you work with, if you know that the demo is going to be completed, let's just say, today you're sitting here, you're thinking, my demo is going to be done on Wednesday. I would order that appraisal today or tomorrow, Friday, let's say. So that way your inspector comes out Wednesday afternoon, right after the demo is done. This way you get your funds as quick as possible. Because if the demo finishes Wednesday and then you call Wednesday afternoon when it's done, the inspector might not be out until Friday morning, for example, and you won't get your funds till Monday. So it's just a good way for you to speed up the process.
Okay, so part of the way that I'm going to manage my contractors is tell them, you know what, my lender won't give me any money until you're done with the demolition. So why don't you give me the time when the day you're going to be done, and we'll order the guy to come out and look at it, because I just can't give you any money until they give it to me. Does
Absolutely.
that make sense?
And absolutely. And that's actually a great way to manage it in general, whether you have the money or not. It's good to keep your contractor honest, to say, hey, look, it's not me, it's the bank, right? The bank's not going to release any funds on this project until the demo's done. We have different stage points, and when I get paid is when you get paid. And that's how it should work. You should always be careful. Always, always. A very important thing, guys, is do not give your contractor much, if any, money at all when you start the project. There are some contractors out there that will start with their own money right from the beginning. And then there are some contractors out there that ask for a deposit to get going. Do not work with a contractor that asks for half or the whole amount up front. It's just, unfortunately, it's too high of a chance that it is possible for that contractor to turn around and say, you know what, I don't want to do this job, for them to disappear, something comes up. Now you have all this money out on the line that you're potentially going to lose. So let your contractor know, hey, look, I'm working with a lender. and they're going to give me the money in 5 installments. This is going to cost us $100,000. How about I give you 20,000 to start? As soon as you're done with the first 20,000, I'll give you another 20,000, and that's how we'll pay for this throughout the process. And most lenders will understand and work with that. But again, whatever you do, do not give a lender any more than you need to give them to start.
Okay, so is there any particular advice for first-time home flippers with very little money? So here's a question for you, Ed. I come to you to borrow some money. Um, how much money are you? So I'm gonna have to have money in a bank account, or can I borrow money from a private lender, maybe, to use for my down payment? Will they let me do that?
So most lenders will not do what we call it sourcing funds, which means that they're going to look and see where the money came from. So let's say you have no money and you get a large investment from a private lender, or and that private lender can be mom or dad or an aunt or an uncle, let's just say. And let's say they give you $50,000. No, most lenders aren't going to ask where the $50,000 came from, so you can borrow private money. Some lenders will ask where it came from. Again, where a broker comes in, we can guide you through that process. We know which lenders will ask and which lenders won't, and we'll be able to educate you on the process. Another thing, though, that I would say is that if their advice for a first-time flipper is, I do work with some companies that give business lending. So let's say when you purchase a flip, something we didn't talk about, most flips need to be purchased by an LLC or an entity and not by an individual. So hard money lenders won't actually lend to individuals, they will lend to entities. So what I mean by that now is you can go out and get a line of credit, for example, underneath that business. You might have to personally guarantee it. However, this is a great way to get some money to start your project. So
Okay, so they're going to require me to sign personal. They're going to require me to have an entity, and at
yes,
the same time, they're going to require me to sign personally for the loan, or can the business sign for the loan? And it's just the business.
it depends on the lender, but most lenders are going to ask you to personally guarantee the loan. This is because most flippers are providing, it's a new business every single time, so that business really means nothing and can't really show experience. But it's also a way so that way they know that you're vested in this project and you're going to make the payment at the end.
Okay.
As full disclosure, I will say from my experience, anybody who can't pay, there is a process that the bank will take the home back. However, you don't find this isn't like a situation where you're paying these guys for the next 20 years because the flip went wrong. It's actually called a deed in lieu. So you would just hand over the deed and you would just walk away, and the bank will take the property and do whatever they do with the property. So yes, you're personally guaranteeing the loan, but it's not something that will haunt you for years to come if something happens. Where maybe your personal home, for example, if you default on that, that'll probably hurt you for a lot longer than if you were to default on one of your flips.
Okay, so the next thing that I'm going to guess they want to see is enough money for a down payment, no matter where that came from, and they're also going to want to see if they're billing me, if it's, let's say that it's going to cost $2,000 a month, and it's we haven't talked about what the term is or what you go over the term. We'll get to that next, but they're going to want they're going to want to see that we have enough money in our account, I imagine, to pay the interest through the term of the loan.
Correct. So most companies are going to ask for your reserves. So they're going to want to see that you have money in your account after the loan closes, not just for interest, but also for that rehab, right? You've presented a scope of work now that shows that you're going to be doing $10,000 on your first draw. So they're going to want to see that there's at least $10,000 in that account. Now, if you use your credit card to pay for the work, that's okay. However, they're still going to want to see that there is $10,000 somewhere, because that will then include interest as well as some sort of the rehab.
Okay, so they do want to see some money. It is possible that you're going to have to front some money, and I gave an example of a milestone. Maybe the first one is demolition. The second one is that you get your plumbing roughed in, and then they'll get and your electricity, and then they'll give you some more. And maybe next you're gonna finish the bathroom or the kitchen, etc. So you're going to have some money possibly to front, or you're going to have to do a good job in managing your contractors and make sure that you don't pay them too quickly, because if you pay them too quickly, they could go work on another job, but if they're hungry, you're hoping they're going to stay on yours. um, I think we pretty much answered that question for first time flippers. And how long does it take to close a loan? So let's say that today I email you a copy of my contract to purchase. How long? Give me a timeline that we're going to expect to see between today and when we close.
So typically it takes about 2 weeks to close a loan, a hard money loan. That's really it. That's the general time frame. Some lenders can do it quicker. Some lenders do take a little bit longer. I would say that it is very much up to the borrower because there are documents that need to be collected. So if today you send me over a purchase contract, I'm going to send you an email back looking for an application for whatever lender we're going to, assuming we might not have done that already. And then I'm going to ask you to send me over some documents, some basic documents. Every lender is going to look for, since you're purchasing into an entity, they're going to ask for those entity documents, being the EIN number, the certificate of formation. So I'm going to request those back from you. If it takes you 2 weeks to get those back from me, then you can expect that it's going to take longer than the 2 week process. However, if I can get all the documents up front and in order, it should still take 2 weeks. So the three things that hold up a hard money process is going to be title, getting title insurance on the property. That usually takes about 5 business days to get done. And then you're looking at collecting documents. That takes as long as it takes you to get the documents, as well as an appraisal. We will do an appraisal on every project. However, I've met people that have contacted me and said, I already ran title. Maybe they already have an appraisal because they tried going to a different lender. We can close those loans in 3 or 4 business days as long as it's a good deal, because I already have all the documents, assuming you provide me a package with all the documents that I'm going to need.
Okay, so we just figured out found two more expenses before we close, and you didn't mention insurance. You mentioned title insurance, but we're also going to need some hazard insurance.
Correct.
The next thing we're going to need to do is to get an appraisal, and if it's a single family house, generally what's an appraisal going to cost me?
Say for a single family home, you're talking somewhere around $450 to $550.
And so I'm going to get now. Do I pick my own appraiser? Do you send out somebody you like? Is the appraiser that I choose go the same one that's going to come back each time I want more money?
So the appraiser is not somebody who you get to choose, unfortunately. Most lenders work with either a local appraiser that they use the same time for all of their loans, or what's called an appraisal management company, where they will call the appraisal management company, and that appraisal management company works with different different local appraisers. So in that case, it might not be the same appraiser for every project you do. However, for example, if you do all of your deals in Norwalk, right, it's probably going to be the same appraiser each time, even if they're using an appraisal management company. So I would keep that in mind. And the person who does the inspections to see if the work is being done, no, it's not always the same as the appraiser. I've worked with lenders where the appraiser and the inspector is the same person, and I've worked with companies where they specifically hire an appraiser to do the appraisal, and then they hire a management company to come out and do all the draw inspections.
Okay, so the other thing is that the appraiser that's doing this is going to do something a little different than the appraiser that comes out and appraises a single family house that maybe you're going to buy to live in for a regular mortgage. And you're going to get a couple of numbers from him. He's going to probably appraise it for what its as is value is today, and then you guys are going to want a different number, which is what is it worth when when the work has been completed. Is that right?
Correct. Yes. So they will do two numbers. One is the as is number, and the other is the after repair value number. So they want to make sure that you're not overpaying for the property, purpose for the as is. And then they want to make sure that there's enough room for profit at the end based off the loan that they're going to provide for the after repair value number. Now,
Oh,
trekking back to the as is, if you are a lot of lenders who concern themselves with the as is value will usually lend on the lesser of your as is value or your purchase price. So if you buy the home for $100,000 and they come out and say it's only worth 80,000, they're going to act as if the 80,000 is the purchase number and say they'll lend 80% on the 80,000. So now you'll be bringing that $20,000 extra to closing as part of your down payment because the lender now feels like you're overpaying and they don't want to start the project behind if something happens and you walk away on the job day one.
okay. I just want to mention something you mentioned earlier, and that is that you want to talk to a couple of different hard money people because different lenders and different lenders that maybe Ed has worked with or hasn't worked with might have different terms that you like better. And let's see, Jim wants to know your email and phone again. You want to give that once more, Ed?
Yeah, sure. Maybe I can actually I can comment on the Facebook
Yeah, why don't you do that? That
page,
would
and
be the best thing, and then we'll move on to the next question. If an investor basically has no money and can expect 70 to 90 LTV from the lender, are you able to help the investor get the rest of the money if necessary, maybe from another lender, or does the LTV amount plus the rehab money usually cover it all anyway?
let me just reread that here for you as I was typing my thing here. So if an investor basically has no money and can expect 79% LTV from the lender, are you able to help an investor get the rest of the money if necessarily maybe from another lender? Or does the So again, that kind of goes back to the same question that you were asking before. If you don't have any money, can you get assistance? Um, the So let's say you have no money at all and they're only going to lend 80%. Yes, you're going to have to go and find another lender. Most lenders, though, hard money lenders don't allow more than one lien position on the loan. And again, I'm talking about a standard, typical hard money loan. The hard money lender wants to be the first and only lien holder on the property, which means they don't want anybody else having a right to the property besides them if something happens.
So
So
they don't want to see someone in a second position.
correct. And they don't want to be in second position either. They
Well,
want to be the
that's
first person in line to get their money. So
okay.
this is why I mentioned earlier that there are places you can go to that will lend your business some money, which has nothing to do with your house, right? So you go, there's a guy that I work with. Again, you know, I was telling somebody today, I almost can call myself like a financial consultant, almost more than a hard money lender at times, because I met somebody today, actually, yesterday, who was looking for a loan and they didn't have enough funds for the capital. So I introduced them to another company that I work with who is now going to go out and get them a line of credit against their business, even though their business doesn't have anything really there to show for, but there are companies that will lend on that. So they're going to go out and get a $25,000 line of credit. They're going to take that $25,000 and then they're going to go and use that as their 20% to go purchase the home. Now, the hard money lender is the only one that has a lien position, and that other loan does not show up anywhere on in this transaction. Yes, I mean, it's still a loan that you have owe something you'd have to pay, but it won't impact the hard money lender because to them, they're going to have the first and only position. And technically now it is your money and it is not somebody else's money you're borrowing to the lender for the down payment.
So we're probably going to talk about this about private money another time, but just to bring up, there are, and I know maybe they're not the ones that you work for with, Ed, but there might be other hard money lenders out there that won't mind somebody in a second position, and I guess that you're talking about business loans. One of the things that people who borrow private money, they're typically very jealous of their list of people to borrow the money from. And the reason why they're jealous is because if they lend the money to somebody else, then there isn't any, but then there isn't any money maybe to lend to the person who found him. So one of the things that you want to do is maybe do a little bit of research on how to talk to people and what to say to people to talk to them about private money. Does that sound about right, Ed?
Yes, that is very true. It's funny. People always, the joke is, "Hey, do you know a private money lender?" And the answer is kind of like, if yes, and if I knew him, I wouldn't tell you who he is, so that way I can use him." But kind of to go off what you were saying. So there are private money lenders out there. Yes, they do lend, but typically these private money lenders, and as you said, you can do another episode on this. They're going to be more of a family member, a friend, maybe your doctor. It's going to be somebody like that. More than likely it's not going to be a random person off the street. You're probably not going to find their website offering, "I have private money," right? It's not going to be that. It's going to be a relationship that you've networked, as Ed was saying, to find them, and those will be the guys who will provide you some sort of private money for a deal.
Okay. I guess we're going to wrap this up. Any final words, Ed?
No, I think I covered it. I mean, just the key things I would say here is don't go to the first guy you meet. I would check out multiple lenders. I think that brokers get a negative, mark out there in this hard money space, because a lot of times they do make clients charge sign a document saying that they're going to pay them some sort of extra fee for what they do. I am trying to personally change the way that's being done. I mean, I'm not doing it that way. I've made relationships to get paid by the lenders. So I do think that there's an advantage of working with somebody like myself. However, if you are a little nervous about working with brokers, I do suggest you call and do the research yourself maybe and speak to many different lenders and try to figure out what the best options are for you.
Okay. So just to wrap things up here, this is Ed Hendrickson, and I'm Ed Weinberg. And I guess that what would be nice if you're watching and you watch some of this, you can maybe put in a comment. What's your biggest takeaway today? Actually, if you'll put it up while I'm finishing up, then we'll put it up on the screen. So I'd like to know what's your best takeaway. If you're watching this on the replay, if you make some comments, I'll make sure that every single comment is answered. If you are watching, at least say hello, at least give me a like, just so I know you were there. And so a little bit about what we do. Where if you're watching, feel free to come join the Facebook group CTRE Investors. You'll see it when you get there. You'll know it because it's got a brown roof. You can also find broadcasts such as this on CTRE Media, also on Facebook, and on CTREinvestors.com. We also have a YouTube channel, CTRE Investors, and when you find it, you go to it. You got to push video to see all the. But we're trying to get them all up on the website, and we're trying to get all the past ones up on CTRE Media. So thank you again, and no more questions. I think we got everything. Thanks a lot, Ed.
Thank you. And just so you guys know, I'll go through and answer any questions I can through the comments once we're done here. But I do recommend you reaching out and checking me out on my website, and or just directly reaching out. I'd love to answer any questions you guys have.
All right. So I guess, Ed, have a great week.
Thank you. You too. Bye, guys.